before we kind of dig into some more, I kind of would say, deep and thoughtful leadership, kind of current events conversations. Let's talk what's finally happening in the world of interest rates and the latest update on the Fed front.
Oh God, it's been this week was all about the Fed meeting on Tuesday, Wednesday, and it's always this lead up, and we've spent almost the entire year leading up to the September meeting. There's been this anticipation. As the years gone by, whether it's been employment or advances on inflation. So it was well thought out ahead of time, well planned that we were going to get a quarter point reduction in interest rates. And it happened as planned,
no surprises
as advertised. And the big challenge, I think, for most of us, especially in the mortgage industry and the real estate industry, and we touched on this last week with our guest, and I kind of warned. I said, the Fed rate and mortgage rates are two different things, and it's a problem for consumers because what they see is all this news. Interest rates are dropping. And, it's not a direct cause and effect. Matter of fact, a lot of times the long-term interest rates, we're more of a future type of market. Things that happen, we think they're going to happen, so our markets react. And so for the last, I would say 45 days to 60 days, it's been pretty much a lock that we're going to get this quarter point reduction. So our rates have been falling, improving, in other words, for at least 45 to 60 days. Probably started as far back, if you really look at a chart, probably started as far back as late April, early May. And it's been this slow improvement of interest rates. And here's where the difficulty comes in, is on Wednesday, they came out of the meeting, announced that they're lowering by a quarter. Markets went crazy. Everybody was excited. Yay! Powell had his comments, and that's the important thing. Our market, the long-term interest rates, actually kind of ticked up, kind of deteriorated from where we were last week, if you will. And so it's confusing for consumers. We get all the calls now. It's like, hey, what do I need to do? Interest rates are going down. Can I refinance to a lower rate? Yeah. And it's really hard to then go, well, wait a minute. I had called you last week to talk about interest rates. This week, they're kind of inching back up. Let's hold and see. And it's hard to have that conversation to explain to a consumer. So it's kind of crazy. The comments from the Fed chair, Powell, is that, yes, we might even have another one or two, quarter point reductions in the following months, but that his problem is that inflation is still really sticky, which it just hasn't come down to their target. And so he's kind of steadfast that he wants to wait and see about inflation.
Yeah, and it's funny, too, because like you said, you touched on there's two sides to this coin. Is the consumer side that the media is jumping on, hey, rates have come down, and everyone thinks confetti's falling from the sky. This is what we've been waiting on. Here comes the rates. Right. And then they call a loan officer, and they pick up the phone and go, hey, our rates increased today. Where it's like, it just becomes this two-sided coin, unfortunately, and it's hard that consumers feel like, well, how could rates go up if rates have come down? That doesn't make any sense.
And you know what's even a double whammy, and a lot of people don't think about this, is your checking and savings account at your bank, they're most likely a member of the Federal Reserve.
Right.
And so if their borrowing overnight costs go down, that means that they're also going to lower the interest that they're paying you on your checking and savings account.
That's right.
So your savings earns less interest, but it's a real possibility that, like yesterday and today, our rates have kind of, like I said, they've kind of deteriorated. Not tremendously yet, still waiting and seeing, but our rates got a little bit worse. So it is kind of a double whammy.
Yeah. And it's so funny because we had been warning about it for the last couple of weeks, at least on the Blitz Break, that, hey, we think it's baked in, and we already are feeling it, and we're seeing the lift from just this idea of them being able to drop rates. Now that rates have dropped, it's like, well, we knew that was coming, and rates go up.
Well, that's one of the things that is kind of a differentiator for loan officers, real estate agents that are veterans that know the industry and understand it, is how much are they actually preemptively having these conversations with clients. I know early in my career, before I learned, the bare minimum or whatever you want to call it to survive
Economics
20
101.
years, right? I wasn't having those conversations in my first year or two with the clients, right, on those updates. So when the things hit, I'm reacting to it, right? And as you get older and you, or forget older, more seasoned, and you have more years and experience in the industry, now you're preemptively having the conversation with the clients. You're setting the stage so that they don't make those calls. You still get the ones from the people you haven't talked to, but you can tell loan officers that didn't have those conversations and realtors that didn't have, their clients are losing trust a lot of times because they're going, hold on, that doesn't make sense. And this whole conversation